Hello traders and welcome to another video review. Today is Wednesday, May 20th, 2026. Let's take a look at the Forex economic calendar for today. What do we have here? Let me just switch to the very important data. There you go. The key very important data releases for today are from the UK, CPI lower than expected, down from 3.3% to 2.8%, less than forecast of 3%. We are still waiting for the CPI data from the Eurozone, which is scheduled for this at 11 o'clock. The market participants expect the CPI to stay at the level of 3%. Crude oil inventories are scheduled for release at 4:30. This data are from the USA, and the same data from the USA, from the same country, but data are different. FOMC meeting minutes, as usual, 8 o'clock p.m. On Wednesday. So today is the Fed day yet again, but those are only the meeting minutes. Quite interesting for everyone who wants to know how about the interest rates, how about the further steps related to the interest rate hike or cut by the Fed. So FOMC meeting minutes scheduled for release at 8 o'clock p.m. tonight. That's everything from the macro. In the macro part, let's now switch to the charts and we start with euro dollar. So the euro dollar 4-hour time frame chart rejected from the supply zone almost perfectly. Local high 1.1663, technical resistance 1.1663, technical resistance 1.1669, 8 pips miss. And then movement to the downside. We broke below the yesterday's low 1.1609. Now this level will act as a technical resistance, so we keep expanding the wave C to the downside. My next level is located roughly around the lower channel line. It will be 1.1550, 1.1560. Nevertheless, the technical support is still located roughly around 1.15 and 10. This is weak technical support. There's one more weak technical support located at 1.1444, low from the last day of March 2026. Momentum is weak. Momentum is negative, only 26 points. Big pressure on euro across the board. British pound tests the 1.3383 level. So far, as you can see, very low volatility on a 4-hour time frame chart. Momentum at the level of 42, so slightly bearish momentum. The situation here doesn't actually look bad for the bulls, because we got very nice bounce from the lows of 1.33, almost 150 pips rally. Then this might look like even a correction, possibly some kind of a pullback, a little bit long in time. Nevertheless, it's still sometimes some sort of the pullback. I will change this color for the level of 1.3380 for green. That might be technical support. Now, any breakout lower is bearish. Any breakout higher is obviously bullish. Next target 1.3347 for now. No more situation here on the cable. US dollar versus the Japanese yen. It just popped a little bit higher than I wanted. And this looks like that, my dear fellow traders. This looks like a sustained movement to the upside, minding its own business. Now a little bit of the pullback, not that deep actually, from the extremely overbought conditions. Right now momentum 63 points. We can still see another spike to the upside unless 158.70 is clearly violated. I guess this is the intraday technical support. Maybe this might be even better. Yeah, this level is fine. 158.68. This is the local technical support. Any breakout below will be considered bearish. Gold keeps moving lower. Despite the fact that we bounced from the extremely oversold conditions, it didn't last long. Local high 4,588, reversal to the downside. So what we got here is another technical resistance, and this level here, well, it will act as the technical resistance as well. Let me just find out where is the next potential target. Well, the next potential target for the support is located roughly around here, and this is 4,350. So that's the technical support for the gold. It looks like the gold really wants to continue the wave Y of a big correction that is taking place right now on gold. Is the same situation on the S&P 500? Let's take a look at the 4-hour time frame chart. Well, we keep moving lower as expected, because our scenario said that the movement to the downside is now the biggest one in the whole series. So this is the overbalance of price and time. A, B, and possibly C completed to the downside. Nevertheless, it doesn't actually look that bad yet for the bulls, because even if we get lower, there is immediate technical support at 7,319, and we can see some sort of the bounce higher here, but the movement to the downside is still in free wave, so it's corrective in nature movement on S&P 500. So thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.